Folks, the stock market has changed in a massive way. This is not your papa's market anymore at this point in time, folks. We are witnessing something play out that we haven't seen in quite some time. A divergence between stocks that are doing absolutely amazing and making people fortunes of money and stocks that are faltering in a massive way. And we witnessed this last year in 2022. That was really the start of it in terms of not just all stocks going up or down together. And we watched stocks fall 40, 50, 60, 70%, 80%, while other industries actually saw their stock prices go up and actually do very well. 2023, we're seeing that exact same phenomenon. Certain people in certain stocks are making an absolute fortune in this market. And this is like the best market ever, right? Meanwhile, the Dow Jones Industrial Average is up a whopping 1% for the year. 1%. And meanwhile, certain folks in certain stocks are up 50%, 100%, 150%, 200%, looking around like, oh, this is great, right? So we got an interesting phenomenon now at this point in time. And in today's video, I want to cover 7 stocks that are absolutely making people a fortune right now and are performing very, very well, despite the market kind of, let's just call it being in a meh place, and despite a lot of stocks and a lot of industries actually falling to 52-week lows right now, multi-year lows, and some even multi-decade lows now at this point in time. So appreciate everybody joining me as always. Thank you for being subscribed, folks. I very much appreciate it for you guys always joining me. If you're looking to apply to join my private stock group, the private wealth group, or get access to my Becoming Master of the Stock Market course this week, check out the application. That will be either the pinned comment down there or will also be the link in the description if you're looking to level up as far as your investing game, okay? Alrighty, guys, let's get straight into this. First stock of these 7 stocks that's absolutely making people a fortune right now is NVDA stock, NVDA. This stock is up 145% from mid-October. It's about 6 months, folks. 6 months, and the stock has gained 145%. Absolutely incredible. But not just that. You got to think for a moment, right? When people buy stocks, sometimes people, let's say you have $10,000 to invest. What a lot of people will do is they'll buy $8,000 worth of a stock, and then they'll buy $2,000 worth of call options, right? And that's not really my strategy, but there's definitely a lot of people out there who do this. So let's say you were doing that 6 months ago, right? You were buying NVIDIA stock straight up. You were also buying call options. This is shocking, okay? These are options that expire in June, this coming June, okay? If you look at something like a $270 strike, which if you were buying this back in October, it wasn't looking very good, right? Because the stock was like $110 or so. So 270 was like a mile away. Like it's no way it's getting to that by summertime, right? But some people like to take some risk out there. And those that took that risk, my gosh, okay. Look at those options now. The premium, $27 a premium. I can almost guarantee you could have got those options for about $1 a piece. $1 a piece. Back 6 months ago. So basically meaning, folks that might just put a little money in these options have probably made 27 times their money. I wouldn't be surprised if it was even more than 27 times their money now at this point in time. Who would have known NVIDIA stock would come back this strong, this fast? I mean, you could have thought maybe it'll get back to 200 by this time frame, something like that. But this insane move with NVIDIA. But we got to ask ourselves, is it that insane, right? And I'm gonna answer that question in just a moment here, because NVIDIA has something incredible going on right now. That's a game changer for actually their business model, and I'm gonna dive into that in just a moment. You look at even like the 135 strikes, which that wasn't that crazy. If you were buying 135 strikes back in October, that wasn't that crazy, because I mean the stock was 110, 115, let's say. 135 is not that far away. So you would have had to pay $30 to $35 a premium likely back in October. That's about a 4x return. A 4x return in 6 months, once again. Absolutely incredible. Now, when you look at NVIDIA, this is one of the most debated stocks here in 2023 because it's gone up so much, so fast, right? A lot of people are saying it's a shorting opportunity. They're saying it's overvalued, all these different things, right? And as far as the stock, it trades at about almost a 3x forward P versus the market, right? About a 60 forward P on the stock. And so from this standpoint, you would say, oh, yeah, it does look overvalued. It looks like it has to come down, right? But at the end of the day, I don't think people understand how big AI is going to be for NVIDIA, not just, let's call it 10 years away, but I'm talking even over the next 3 to 5 years, right? This is pretty insane. ChatGPT runs 10,000 NVIDIA training GPUs with potential for thousands more. Artificial intelligence is already providing business opportunities for GPU makers, mainly NVIDIA, but AMD and Intel and Google are releasing new hardware and software as well to support deep learning workloads. The deep learning field will inevitably get bigger and more profitable for such players, according to analysts, largely due to chatbots and the influence they will have in the coming years in the enterprise. NVIDIA is viewed as sitting pretty, potentially helping it overcome recent slowdown in the gaming market. The most popular deep learning workload of late is ChatGPT in beta for OpenAI, which is trained on NVIDIA's GPUs. According to UBS analyst Timothy, ChatGPT used 10,000 NVIDIA GPUs to train the model. But the system is now experiencing outages following an explosion in usage. Remember, this is back in February. It's gone even more insane, a lot more insane since then, with an explosion in usage and numerous users concurrently basically, using the model. And so, nonetheless, AI is going to be an insane boom for NVIDIA. They're going to be likely the most direct beneficiary. I think AMD is probably going to be the second most direct beneficiary. And then, there's going to be other players, whether it be Intel or Google or others, that are going to make money off this as well. Okay. But you got to understand, this is an insane opportunity for NVIDIA here. It's honestly a game changer that not a lot of people are even taking serious. Literally 6 months ago, I don't even think people were taking this that serious. But since ChatGPT has gone so insane over the past 6 months, it's completely changed the game, right? And if you look at ChatGPT's latest numbers that came out last month, right? Nearly 2 billion times the site's been visited, and it's getting about 25 million daily visits now at this point in time. And it's not just about the daily visits. It's a lot of times it's people doing essentially multiple searches at a particular time on ChatGPT. You can call it search or whatever you want to call it, right? And so they're using it several different times. So nonetheless, folks, this is going to be an industry that just, balloons over this next, I would say 5 to 10 years. And somebody like NVIDIA is going to make an absolute fortune of money off this. We're talking about, we could be talking about tens of billions of dollars in net income for NVIDIA over this next 5 to 10 years from just AI opportunities alone, right? So that's the first one. Second stock up here that's making folks rich is Elf on a Shelf. Look at this. Might be the best stock in the market the past year. Certainly up there, right? Stock is up 226% in the past year for a cosmetics company. The thing I love about an Elf on the Shelf is it's doing even better than a stock like NVIDIA. Much better, right? But it's not complicated at all. It's cosmetics, makeup, beauty, skincare routine, stuff like that. Oh my gosh, right? And this is a stock we're up over 1,000% on now at this point in time, and I'm still not planning on selling these shares anytime soon, to be honest. This is just a long-term hold for me in terms of this last 1,000 shares. Another 3% here today, another $2,600 there. And the thing that's really changed the game for Elf on a Shelf is you look at the results. 49% revenue growth. Who's putting up those numbers in this environment, in this economy? And this is where we get into the haves and have-nots of the stock market and the haves and have-nots of the business community, right? Gross margins taking off like a beast, right? That's 1.8% up year over year. Almost 70% adjusted EBITDA up. These are incredible numbers from a company like Elf. But to take it a step further, look at this, okay? And this shows you over the past, many quarters, the last, 16 quarters for the company. So one is, that's great. All these consecutive quarters, companies don't execute like this except for special companies. But the most important thing is Q3, revenue was up 49%. Usually Q3 is rather lame for the company. They had 11% growth here. They had 10% growth here. And they had 8% growth here in all those Q3s of past years, and then 49% growth. So now you're looking at an Elf on a Shelf here where you're going to have to try to figure out, where do you model numbers? And even as a shareholders company, I'm even confused. I don't know whether to model this company as a 20% grower, a 30% grower, or a 40, 50% grower, to be honest. They've shown such an extreme move that you're kind of wondering, is this sustainable? Look at this, from 11%, 13%, 26%, 33%, 49%. At some point, the trend's going to break, right? Maybe it's this upcoming quarter. Maybe they only grow 35% or 30% or whatever, right? But when you look at something like this, it's absolutely incredible. So that's where the excitement comes in a stock like Alpha is these consistent numbers, but then this massive reacceleration of growth that you got to think, what's going on here, right? This is somebody in the private stock group, in the private Discord chat, posted this photo of their local Walmart, of just the Elf section now at this point in time. I remember when I first started investing in stock some years back, I don't even think they had a presence in Walmart stores. Literally, I can't even remember if they had a presence in Walmart stores. And to see this big of a section now in Walmart stores is absolutely incredible for this company overall. And so my hope is that in 4 years from now, I'm going to be showing you screenshots of Honest being in the same position of I'm up 1,000% plus on it in regards to that one, because I've continued to believe that's my next Elf, right? And the thing I think is important to understand with Elf is this company had a horrible, and absolutely awful, first 2.5 years of being a public company. The stock from IPO went down 68%. 68% over the next 2.5 years, while the market was actually good. S&P 500 actually went up 30%. So when I invested in it, it was definitely a scarier time with ELF. They hadn't been really performing very well, to be quite honest. What the heck? Why does this look like that? That was weird. It hadn't been performing very well. The company had been underperforming, and obviously the market was trashing ELF at that particular time. But I took the risk on it, and obviously paid off in a pretty epic way. And if you look at something like Honest, right? And this company's been public for almost 2 years now at this point in time. They hit their 2-year mark in May. And it went public at the end of a bubble. They missed many numbers. They had inflationary pressures, and they had to fire the CEO. And nonetheless, the stock's gotten absolutely damaged in a heavy way, right? 90%. ELF probably would have been down 90% if the market did as poor as the market did, obviously, over this past, let's call it almost 2 years now at this point in time, right? But the difference is ELF had an uptrending market during the time, right? That market was up about 29% versus S&P 500 down 2%. So, it's like all what do they call it? The tides lift all boats or whatever. A rising tide lifts all boats. And so we'll see what happens with that one. Okay, number 3 of these 7 stocks up here, making folks rich here, is Coinbase. Ticker symbol coin on this one. Stock is up 96% this year to date, 4 months into the year, right? And I think there's a couple of reasons why this is transpiring. I think think about the competitive landscape, okay? Think about all the major competitors. Who were the major competitors, a year ago, 18 months ago for Coinbase? And I'm talking about over a long-term basis. Voyager, FTX, Celsius, maybe BlockFi, But obviously, FTX and Voyager seem like more serious long-term competitive threats to somebody like a Coinbase. They all went under. Who else is a major competitive threat maybe to Coinbase? Binance? But there's a lot of questions what's going on with Binance. A lot of questions, okay? And so I don't think a lot of people with any sort of major money feel safe putting any money with Binance. So now, Coinbase is basically just, I don't want to call them having a monopoly on the industry, but now at this point in time, if you're going to consider, and a lot of people don't want to do the whole cold storage and have their own wallets and stuff like that, right? They want to just buy an exchange and keep their money there, even after everything that's transpired. And so now if they're going to consider that, like Coinbase is like the only place to go. It's almost the only game in town now at this point in time. You can say, well, you could buy a Bitcoin, Ethereum, and a few other cryptos on, let's say, Robinhood. But the problem with Robinhood is people don't take Robinhood that serious, especially a lot of people with significant amounts of money. And then the other issue I think Robinhood has is, to be honest, they're known as a stock brokerage, right? It's like if you're going to sign up and you're like, I want to put $5,000 in Bitcoin or Ethereum or whatever it is, right? Like people don't consider Robinhood first. They might, if they already have stock brokerage account with Robinhood, they might consider buying crypto, but usually people are just going to go with Coinbase. So with Bitcoin doing well and a situation where they almost have like I said, I don't want to call it a monopoly on the industry, but they're only the only player in town that's taken seriously now. That puts them in a pretty good position. I think that's why Coinbase stock is performing so well and making people a fortune. 96% on the stock price just this year. That means, if you're buying calls on this at the end of 22, beginning of this year, some people are up hundreds of percent or thousands of percent on Coinbase just this year. It's an incredible move. Number 4 of 7 up here is C3AI. This is a stock that's up 108% this year. It's making people a fortune. And, with C3AI, a lot of debate around this one. I know Kramer came out and said, he's like, oh, it's just, whatever. He trashed the company, okay? He also did that with Palantir at the same exact time, right? But, you look at the numbers for C3AI. They're pretty impressive. 92 million, then 157 million, then 183 million, then 253 million. Like, that's not, that's impressive, right? Now, the company is taking big losses, so that is something that is a negative for the company, and no one really wants a company that's taking losses right now. But, it looks like there's 12 analysts that cover the stock for the next couple of years, right? And, yeah, only 5% revenue growth this year, but they have them doing 20% revenue growth on average next year. So a nice reacceleration of growth for C3AI. So, I got to do more digging on this one and see what's here and see, obviously they're benefiting from the AI hype right now, let's be honest. But maybe they're going to be a real long-term big player in this market. I don't know. I'm going to have to do more digging here, but I can tell you, if they're going to scale up revenue like this and they, eventually get to $1 billion plus a year, they're a real player in this market long-term. And obviously artificial intelligence, we're still at the early days of this opportunity in terms of a revenue profit opportunity, early days. This is an industry that's, got 10, 20 years of just massive growth ahead of it in terms of the actual numbers. People have been working on artificial intelligence for a decade plus now at this point in time. But in terms of the revenue opportunity, we're at the infant stage of that. You look at a company like NVDA we just talked about, right? A company like C3 AI. I think companies like Palantir are still early days on AI. Obviously, ChatGPT is a crazy big opportunity. Look at how many paid users ChatGPT has now at this point in time. And think about that opportunity for Microsoft. Microsoft owns a huge portion of ChatGPT, so that's going to benefit Microsoft in a massive way. So anyways, folks, obviously exciting times there, okay? Number 5 stock of these 7 stocks that are making people a fortune right now is Shopify. This is just a stock price since mid-October. Stock's up 76%. It's been doing absolutely extraordinary. It came down a bit from the peak there, but overall, 76% in about 6 months is very phenomenal for this. Now, I personally own Shopify stock, and I own it in the Patreon portfolio, right? And here's my plan, okay, in regards to Shopify. I want to continue to buy this stock. I'm up 17% on it so far in the Patreon portfolio, and that's in a very short amount of time. But honestly, I'm going to keep buying these shares for probably this entire year, to be honest. I just look at what I see on Shopify is I see an early Amazon. I see if you were investing in Amazon back in 2009, 2010, 2011, I view that as the stage that Shopify's at this point in time, where they're becoming a big player, but they're not really respected as that next big dominant tech company like Amazon was back in 09, 2010, 2011. And so that's kind of my view on Shopify. So I'm going to continue to buy it in the Patreon portfolio. By the way, if you want access to all the moves I'm making every single week in the Patreon portfolio, that will be in the description area down there if you want to join us in there. It also helps support the channel, and I appreciate y'all supporting the channel as always. But yeah, you get to see all the moves I'm making there, all the stocks I own, screenshots of everything. So it's pretty awesome, okay? Tapestry, number 6 of 7 stocks making people a fortune in this market right now. Stock is up about 221% for us. And what's interesting about Tapestry is this is actually the biggest position in my dividends only account. And obviously, everybody in the private stock group gets to see every move I ever make in this account. And they get to see those portfolios. But not a lot of people even realize this is actually my biggest dividend stock in the dividend only account that I have in the private stock group. And so this is a position that's been doing tremendous for us. They own Coach, Stuart Weitzman, Kate Spade, some of those big higher end, I guess you can say, brands. Not as high end as like a Louis Vuitton or something like that. They're kind of in the more affordable for like the middle class, upper middle class, and whatnot. But when it comes to this company, it's not just that it's been giving us great share gains on the stock over time, but the dividends have been phenomenal for the stock. And even right now, this company pays about a 3% dividend yield. Now, based upon some of the shares I bought in regards to the stock, I'm getting like a 10%-ish yield on some of the shares I bought for this company, right? Which is absolutely insane to think about. I can make like 10%-ish a year on just the shares I bought in terms of some of those lots of some of the shares, right? And that's just extraordinary to think collect that money each and every year. And they actually have a lot of room to up the dividend if they choose to up the dividend in future years, which I wouldn't be surprised if they just kind of move the dividend up a little bit each and every year. So that's the power with dividend stocks. It's not just about those share price gains, but it's also about those dividends. And you just collecting that money. And then what do you do with that money? Instead of buying something with it, we can reinvest that money, right, into more shares and more shares. And it doesn't have to be in a Tapestry. Usually what I do is, let's say Tapestry pays me a big dividend. I'm not really necessarily interested in buying more Tapestry shares. So what I do is I just put that into my next dividend stock. Maybe it's a Target in this market, right? Maybe it's a Cheesecake Factory. That's basically what I do with my dividends. Just funnel it right back into the next one, okay? 7 stock making people an absolute fortune in this market right now is Meta stock. The stock is up 72% this year, folks. 72%. It's up about, it's probably up about 130 or 140% from where the stock was when it bottomed out. And the interesting thing when it comes to Meta is, this stock's up 72% this year. The Dow's up 1%, right? And that's where I get into we're in a haves and have-nots market now at this point in time. We have some companies performing absolutely amazing and their stock price is thriving, and you got others just not really doing too well, right? And when it comes to Meta, we're up $167,000 so far on this position. This is the biggest position in the public account, which is my main portfolio in the private stock group that you can see every single move I make in there. But in regards to a stock like Meta, it's not even in consideration for selling. The stock is still extremely, extremely undervalued in regards to Meta. So I wouldn't be surprised if this one just continues to perform great over the next 24 to 36 months. Now, last subject I want to cover here, okay? When we go through these positions, right? You've got to understand you've got to work with a big sense of urgency in the market. Now, people get confused between working with a sense of urgency and FOMO in the market. There's a big difference, okay? Working with a sense of urgency in the market is understanding when you're getting great opportunities, pouncing and taking advantage of those opportunities, and not just kind of being like, oh, I could take this more serious tomorrow or next week or next year or something like that. At the end of the day, you've got to take this stuff serious now. There's great opportunities in the market. There's going to continue to be great opportunities this year, and you've got to pounce and you've got to take advantage of those opportunities. FOMO is a whole different thing. FOMO is when you have no clue what you're doing, no clue what you're looking at. All you do is you see an asset going up in price, and you're like, I've got to own that. And so you go buy it, right? And that's a whole different set. When you understand a sense of urgency, that's a position where you understand what you're doing. You know how to research companies. You know what you're looking for in these companies, right? And you're able to see an opportunity, a stock trading very undervalued, you're able to take advantage of the opportunity and then make 50%, 100%, whatever percent, right? If it's a dividend stock, collect the dividends from it as well. And use that and then go ahead and reinvest that in the next one. Just continue to build your pie bigger and bigger and bigger, right? Big difference between sense of urgency and FOMO. Work with a sense of urgency in this market, right? If you don't work with a sense of urgency, you will be left behind. I promise you. Just as people that were not taking advantage of all the opportunities we got last year have been left behind. And people that are not taking advantage of opportunities this year will be left behind, and next year as well, okay? And so that's just something, you go work with a sense of urgency, know what you're doing. If you need help understanding everything to look for in companies, how to run portfolios, strategies, everything like that, I have all that for access for you. Apply to join my private stock group, the private wealth group. We can help you with that. Become a master stock market can help you tremendously with that, okay? Fill out an application. That will be in the description area. But I'm telling you, work with a sense of urgency in this market or you will be left behind. And I can tell you, being left behind when inflation high, that's a worst case scenario because your dollars are becoming worth less and less and less. And when you see assets appreciating greatly, and I mean, that's not a good feeling. Let's just put it that way, folks. So hope you enjoyed today's video as always. I appreciate everybody. Much love. Also, if you didn't know, I just did something. I just changed my photo on Instagram for like the first time in, oh my gosh, it might be 4 years or 5 years since I changed my photo on Instagram. So I actually changed it there, folks. So, and by the way, if you ever want to just, send me a DM, say hello to me or anything like that, say hello to me on IG, Financial Education Jeremy. Much love as always, and have a great day.